Welcome. My name is Van Richards, and I'm a chartered financial consultant, and I'm here today to teach you how that you can retire without running out of money. Yes, you can. And the way that I do that is I talk about different stocks. I pick two different stocks from the NASDAQ 100 every day, and we pick those stocks apart. We talk about the earnings, the competitiveness, and the stability, and then the suitability. I help you to understand what's going to be suitable for you for retirement. Now, I can't understand exactly about you unless I know you, but I want to give you some ideas that'll help you so that you can determine which particular stocks may be suitable for you. So let's get right into the daily NASDAQ stock analysis. We have two really interesting stocks to talk to you about today. And before we get into that, I just want to remind you that if you need help with your retirement, if you need help with understanding your particular investments, I'm available. Go to richardsfinancialplanning.com, go down and find the schedule a time to learn more, or the button basically says schedule a time to learn more. Then click on that. It'll take you right over to a calendar. I had a memory block there for just a moment. But if you click on that button, then that button will open up a calendar and you can pick a particular time. Usually in the mornings, I've got a few moments where I can have a phone conversation with people. There's no charge in doing that. I'm glad to help you out. And if I can put you on a calendar, then I can continue to do this without really interrupting with everything else that I'm doing. And I can help you. And perhaps in the long run, I'll be able to help you even more. So without further delay into this, let's talk about the two stocks that we have to talk about today. The first one is Skyworks Solutions. And you might not know at first name of Skyworks Solutions, but if you have a cell phone, you may be using Skyworks Solutions because Skyworks Solutions provides semiconductors for wireless devices to most of the major manufacturers that are out there. The other company that we're going to talk about today is going to be Trip.com. You probably are familiar with Trip.com. It's similar to Expedia and Bookings.com, but did you know this? Trip.com is not a US company. Trip.com is actually a Chinese company, and that's where most of the profits from the company are derived. So let's get into talking a little bit more about these different companies in itself. All right, let me make this just a little bit bigger. And I want to really give you a better idea of what Skyworks Solutions is. So here you go. Here's a little bit of information that I think that you may find very interesting. This is what Skyworks Solutions does. The primary business that Skyworks Solutions is in is going to be creating semiconductor chips for the wireless industry, for wireless cell phones. They do a lot of business with Apple, Samsung, most of the manufacturers they are involved with. It's similar to another company that we talked about earlier in the month, Qualcomm. And we'll talk a little bit about Broadcom too, which is one of their competitors as well. But let's take a look at this because this has been a fascinating story. I love looking at these stocks. You know, I wish I had Doc's time machine where I could get in the DeLorean and go back a year and buy either options or else a bunch of money and piling into this particular stock, because look at this stock. This is where it was a year ago. A year ago, it was at $79 and about 62 cents. Today, it ended at $147.27. Now, if you follow the dancing cursor, yep, you can see that was the coronavirus market crash, and that occurred. And then over a period of a year, even with the coronavirus market crash, this stock is up a whopping 84.97%. That's amazing. Now, look. You can't time these things. But if you also, I think it's very helpful to you to determine, you may be thinking, this stock is on a roll. It's going to keep going. The momentum's going to keep going. I want to buy this stock. Well, hold on just a second, because there's some headwinds that could be coming on with this particular stock. And let's get an understanding of that. Let's take a look at this stock 3 years ago. Remember, as we're talking, the past performance is not a guarantee of future results, but also let's get into this and talk about what it was 3 years ago in 2017. What were you doing in 2017 in October the 6th? Well, on that particular day, Skyworks Solutions was worth $99.08, about 81 cents actually. And then, as you can remember from our last slide, it ended at $147.27. Well, that really, and actually that should say October the 6th, pardon me, the little mistake there. That's really a 47.55%. It's nothing compared to what that 1 year was. Now, look, when we invest in stocks, there's really, when I really need to talk to you about this. This is so important. When we're talking about stocks in itself, and you're thinking about retiring, if you're listening to this, let me know, are you going to retire soon? Even if you're listening to this on the replay, are you thinking of retiring soon? Are you ever going to retire? Do you think that stocks will be able to help you? Well, this is how to strategize and use them for retirement. Number one is it can help you with diversification. And diversification basically means that all your eggs are not in one basket. That's the idea. And with diversification, you may think of your Social Security as actually an asset. You may think of, if you use a reverse mortgage like from your home, and your home pays you an income, that's another asset for diversification. You may have collectibles, you may have art, you may have coins, you may have bonds. There's a lot of different assets that you can have, and not having one particular asset or one particular source for retirement is a good idea. The idea of diversifying toward retirement is that if one of those areas does not pan out, it doesn't do everything that you would hoped, then you've got other different assets. And that really even applies to Social Security, because with the projections right now that are in Social Security, do you think that Social Security is going to pay you enough for retirement? Probably not, because if you look at the statistics, Social Security is only really going to pay for about an average of about 25% of most people's income when they do get ready to retire. That's on average, some more, some less from that standpoint. Depends on what your actual income is currently. If Social Security keeps going the direction that it is, Social Security is going to be reduced by about 26 to 24%. Just depends. When is that going to happen? Well, that all depends on whether Congress can get together and communicate. You might have noticed today that the market was off, and one of the biggest reasons that the market was off was why? It's because the White House and the House of Representatives basically said, we can't come to an agreement before the election, so why bother? So actually, that plays into some of the stock news that we're going to talk about today, because you have seen, actually, when you looked at Skyworks Solutions, you saw that this was off about 2% for the day. But the idea is that as you use this particular stock, if you use this for accumulating money for retirement, you have to think of it through market cycles. A market cycle is not going to be 12 months. Generally, a market cycle is going to be 4 or 5 years. So if you're looking to accumulate money for retirement, the way to use stocks to do that is to make sure that you're able to go through a full market cycle. A full market cycle is basically going to include a bear market and a bull market. You would be safer if you went through 2 market cycles. So that means you need to think at least 10 years down the road. But that all depends upon your particular situation. So let's get into this just a little bit, because the reason I want to talk about market cycles in this is, look what happened back around 2017. If you follow the dancing cursor, this is not a very pretty picture. We actually saw this stock go down quite a bit. But the good news is, over the past year and a half, as the market has gone forward, despite the fact that we've gone through a pandemic, this stock is up considerably. The APR on it let me get over to another slide here. The APR, the annual percentage rate average, is 13.85. That's outstanding. So you had to look at it over 3 years to get that. If you looked at it over 5 years, if you looked at it over 10 years, the idea is a company like this, Skyworks with an S, Solutions, actually has decades of experience in creating semiconductors that are specializing for cell phones, for wireless communication. So you won't want to look at this in a particular, like maybe a 1-year time period. Look at it as a stock that would be something for a market cycle. Now, this is also a stock that might be hurt by some of the changing political things that are going on. If we look at earnings, remember the first thing that we look at in a stock is not just its performance. Actually, that's really not one of the main things that we look at is current performance. We have to look at the earnings, because if the stock is not making money, then it's not going to grow from that standpoint. And one of the good things is, even though that we've seen ups and downs in the earnings itself, they've hit their projections most quarters. Recently, it was a little off, but yes, we had a pandemic, so there were not as many retail sales, and that affected the cell phone business, which affected the company in itself. So they do have good earnings. They're predictable. Now, I want to talk a little bit about earnings going forward from this standpoint, because if you've listened to the news, you know that President Trump and Vice President Biden have different opinions on how that stocks should be taxed. Let me make this a little bit bigger from this standpoint. Okay. These two politicians have differing opinions, and this is not to make this into a political statement, but what I want to do is talk to you about different stocks that may benefit from a Democrat administration, and stocks that will continue to benefit from a Republican administration. And then you can decide how you should invest based on what you think may be happening from this standpoint. Now, there was an article that was from, I believe this is actually from October the 4th. This is a Wall Street Journal article. And this is data which was taken from Bank of America's Global Research. And you may have heard in the news, actually, it's kind of like, a few days ago, this came out, and then all of a sudden, there was this other information that came out that said that the reason that the stock market is going forward and it's gaining is because there's an anticipation that there's going to be an overwhelming election of Democrats. Now, let me tell you what. This is what happens not only in politics, in every part of your life. Human beings have a propensity to look for patterns in itself. All right, you've probably heard this story, but humor me if you haven't heard this. There was a lady that was cooking a holiday meal, and she was making a ham. And making this particular ham, she cut the ends off of it. Her daughter was there, and she asked her, she says, "Mom, why did you cut the ends of the ham off?" She says, "Well, your grandmother did that. And, you know, it makes the ham taste better." And the daughter really didn't buy into that completely. She thought cutting the ends off on the ham makes it taste better. And the mother was like, "Yes, that's the way that grandma did it. That's the way that your grandmother did it. My mother, that's the way that I'm doing it too." So people are looking for patterns. Well, just so happens in this particular story, the grandmother is sitting in the living room, you know, during the holiday, and the daughter walks in and says, "Grandma, let me ask you a question. What does the cutting off the ends of the ham do? How does that change the flavor of the ham?" And she kind of laughed a little bit, and she said, "It doesn't change the flavor of the ham at all. I had a pan that was only this big, and if I didn't cut the ends of the ham off, it wouldn't fit into the pan." So the idea is that sometimes people look for patterns where patterns really don't exist. The mother had looked for a pattern and thought the reason that this is going on is because it must make it taste better. And when the stock market is going up, you've got some prognosticators that are going, it must be going up because there's going to be an overwhelming political blue wave. Well, that may be and that may not, but there's no facts behind that. But the facts that I want to get across to you is this. The facts are that if income taxes are higher in the long run, companies are going to have less profits to pass on to shareholders. That's what this study from Bank of America Global Research came out and showed. It showed statistically. And if you look at the graph that you see in front of you, let me make that just a little bit bigger for you so that you can actually see it. It shows that there are three particular sectors: communications, consumer discretionary, and information technology. These three sectors will be harmed by higher corporate taxes considerably. Earnings for communication services are estimated to be off around 15%. So you see the negative 15. Consumer discretionary is going to be the same thing. So let's put names on some of these different companies. Communication services, that would be Apple. Consumer discretionary, there's a lot of different consumer discretionary, but let's pick the biggest one, Amazon. Information technology. Well, there's going to be information technology that could be Apple. It could be other different companies that are associated with it. It could also be the stock that we're talking about today, Skyworks Solutions. So when we talk about the profitability of these different companies, higher income taxes will make the company earn less, and it will make it so that it grows less. Okay, so hopefully you've not tuned me out yet and you're keeping on listening, because in the event that we do have a Democrat administration, then there are going to be some stocks that are possibly going to be more profitable than the ones that I'm talking about. Let me go to the next slide, because the next slide just basically reiterates and reemphasizes what I just spoke about. In the graph, it shows the average, the S&P 500 right here, the projection for it, and it also shows the sectors, the consumer discretionary, the communication services, and the information technology services. Those three are going to be impacted the most negatively, if that's a proper way to say it. So you have to be conscious of that. Now, I'm not telling you to go out and sell everything, but I want to tell you to keep that in mind when you're thinking about stocks going forward. Okay. So another good thing, though, as we're talking about a company like Skyworks Solutions, is that they do pay a dividend, and dividends are great. We love dividends here. The beauty of your side. Yeah, dividends are awesome, because that 1.32%, no, they're not guaranteed. But, you know, I talked to you a few moments ago and I said diversification was going to be the first reason, that diversification was going to be the first reason for buying stocks for retirement. Well, the second reason is going to be growth, and the third reason is going to be dividends. If you look at what's going on right now with income, the 10-year Treasury note, I believe it is around 0.7 to 0.8%. I'm not sure how it ended today. I believe yesterday it was around 0.77%. That's actually higher than it's been in a while. But if you're looking for a higher income than that, the best way that you're going to get it is going to be from the dividends of dividend-paying stocks. Now, not all stocks are going to pay dividends, and no dividend is guaranteed. But the idea is that if you diversify, you could create an income stream, and that income stream could be something that could help you with your income. And that's another way to utilize stocks for retirement in itself. So let's keep going on and talk about all the different competitors that Skyworks Solutions has. And I've talked about a couple of these in days past. Qualcomm is another company that competes with Skyworks Solutions. Broadcom is another company in itself. And the whole idea is, when we look at the colored spaghetti graph, what does all this mean? It boils down to this. It boils down to this. What it boils down to is to talk about how competitive this particular stock is with other stocks in its industry. If it can't compete, if it can't keep up with companies that are in the similar industry, then it's not a stock that's worth having. Remember, we've talked about the earnings. The earnings is the first thing you want to look at. Competitiveness is going to be the second thing that you want to look at. And if you follow the dancing cursor, you can see that, yes, it did have a fall back during the beginning of the market crash after February and March, but it's actually recovered quite well from that standpoint. Another company that's in here is Qorvo. And if we look at the size of these different companies, if you think about Skyworks at $25 billion, it's hard to imagine, but really this is a mid-cap company. This is not a large cap company. Large cap basically refers to the size of the company. 25 billion, although it's more than I got in my bank account, probably you do too, unless you're somebody that's invested heavily in Berkshire Hathaway, like Warren Buffett. But in case you are, Mr. Buffett, if you want to retire, I'm available to help you with your money. Okay, but the idea is mid cap is going to be around 25 million. 137 million is large. That's when we talk to a large company. Now, when we talk about a core company, this is a reference that comes from Morningstar. The idea of value versus growth is going to be based on earnings in itself. Now, when we talked a few moments ago about Skyworks Solutions, and this would refer to Broadcom and to Qualcomm and Qorvo. Those companies generally, except it wouldn't apply to Qorvo, but we're not going to get into that because that's really considered a value stock. But the idea is the mid-cap value stocks, if you're thinking about a value stock, it's going to be one that's going to be lower priced in relation to its earnings. A company like a Tesla, an Apple, they're going to be much higher priced over top of its multiples. When we're looking at something like what I just mentioned about higher income taxes on corporate earnings, and really what that's looking to do, the Biden plan basically says that the current income tax at 21% is too low. They want to raise it up to 28%. Companies with high multiples of value, companies like Apple and Tesla especially, but also companies like Network Solutions, not Network Solutions, I X that out. What I meant to say is companies like Skyworks Solutions are going to be hit by the same problem as their earnings are going to be decreased because of further income taxes. Okay, let's keep moving on from this standpoint. Remember, always the past performance of these stocks is not going to be a guarantee of the future results. Okay, so we've talked about the earnings. We've talked about the competitiveness. Now let's talk about the stability of a company. And when we talk about the stability, it has to do with a moat. Remember, this is what a moat is with a company. Watch this. A moat is that imaginary barrier that a company builds in between them and their competition. What is going to prevent the competition from coming over and taking over customers or taking market share? Well, let's look at it from the standpoint that some companies really don't have any barrier. They're just basically existing. There are some companies that have a wide moat that they just can't be duplicated. But when we look at a company like Skyworks Solutions does have competition. We talked about it just a moment ago. We talked about Qualcomm and Broadcom. And with those two particular companies, they could come in and be a serious competitor against Network Solutions. But if we look at the intangible assets of the company, and when I say intangible assets, I don't mean to throw out geeky words to you, but intangible assets are going to be proprietary. These are things that this company has done which belongs to them. It's their particular property. Other companies don't own it. Other companies buy their expertise. They buy their design. They buy their manufacturing. They buy their packaging. They have a significant amount of expertise. And when we look at a company like Skyworks Solutions, they have a good foothold in the 4G market for cell phones, but they also have a better usability going into 5G. So it's only going to get better as 5G is integrated into society. And that's probably going to be over the next 10 years. It's not going to be something that's going to be immediate. And that's actually a good thing for a company like Networks Solutions, because what it does is it broadens their competitiveness. It shows that they're going to be able to compete for quite some time. Okay, so we've talked about that. Now let's also look at what other companies, other analysts are saying about a company like Skyworks Solutions. And one company that I rely upon a lot for information is going to be Morningstar. What Morningstar does is they have a star rating system. The star rating system for mutual funds is different than it is for the stocks. When we look at stocks, their star rating system basically says, is it going to be undervalued, overvalued, or fair valued? Their fair value is derived by a multiple of earnings or a multiple of sales. It just depends on how that they look at it. In this particular circumstance, if we look at the value of Skyworks Solution today at 147.27, what Morningstar is saying the fair market value of this company is actually $117. So when we look at it from that viewpoint, it's actually selling at a premium, selling it over top of what they are estimating that its true value is. Now that could come into play when we get into market volatility, because the theory is, when you know about theories are not always, they're never guaranteed. They're just a theory. When we look at it from that viewpoint, this stock has quite a bit of opportunity for a drawback in value. So it could experience losses from that standpoint. So as far as the stars, Morningstar only gives Skyworks Solution 2 stars. So, all right, let's keep going on though. And let me make this one just a little bit bigger for you so that you can actually see it. Because what I do here at this part of the show is I talk to you about what other analysts are saying about Skyworks Solutions. And when we went to 23 different analysts, we found that 14 of them said, yes, this is going to be a strong buy. 2 said that it was going to be a moderate buy, and 7 said that it was going to be a hold. So what we do is we do a little math and average those out and come out to tell you that it ends up being this. Yep, it shows that it's actually a strong buy. So in the current economic environment, this is a strong buy. You have to remember that I'm not telling you should go out and buy or sell this particular stock, but the analysts are saying that this is a good opportunity. Remember, though, that the political environment could change as the economic environment could change too. So you know that old story, the past performance is not a guarantee of the future results. Okay, let's get right into the next company that we're talking about. And this is going to be the explanation of Trip.com. LTD is limited, and ADR basically means that it's going to be American Depository Receipt. It's a Chinese company that's trading on the American market on the NASDAQ. So that gives you a little bit of idea about it. So let's see what they do. Now, the interesting thing about this particular company is that this company could actually be in favor, more in favor, if we go into a value stock rotation. Now, what do I mean by that? Sometimes people, analysts, advisors, they throw out information and it's like, wow, what do you say? Sector rotation is this. There are particular times when certain types of stocks, like growth stocks, all right, and I'm going to qualify a company like Network Solutions as a growth stock at this point. Morningstar actually considers them more of a combination, but I'm going to call it a growth stock. Now, when we look at it from that viewpoint, growth stocks in themselves have certain times when they do really well. And if we look at the past 12 months, which do you think has been more profitable? Do you think that growth stocks or value stocks have been more profitable? Well, if you follow the market very much, the answer is yes, growth stocks have been the profitable investments. But that could change, and it could be prompted by the income taxes on higher earnings. So we could see companies that are value stocks could start to grow more because growth stocks are more stymied from that standpoint. So when we look at a company like Trip.com, let's take a look and see at their history from this viewpoint. Let me make it just a little bit bigger for you and go over here and talk about this just a little bit. Because actually, this particular stock a year ago was at $29.98. And today it ended at $32.03. So really, gosh, over a period of a year, if you were thinking of a 6.84%, on average, if all portfolios did that, you'd actually be pretty happy. But let me tell you what, that's not the end of the story. Let's go back 3 years and look at this. Because I think this is something that's worth looking at. If you're thinking, wow, I want to get into this. Well, let me tell you what, you have to be prepared for market volatility and for what may be happening or the possibility that can happen. 3 years ago, this stock was trading at $55.71. Now, remember what it's trading at today? $32.03. So we saw in that period of time, in that just 3-year time period, it dropped 42.51%. And I know that there's a lot of you out there that are going, gosh, 3 years, that's a long time. It never did start to come back. Well, it may be at this point in time, and it may be at this point in time because of the sector rotation from growth stocks being in favor to value stocks being in favor. So from that standpoint, if you're thinking of what particular stocks would be favored by what particular political administration, you may see that growth stocks could lose some shine, could lose some favor, and we may see value stocks start to grow a little bit more if we do have a Democrat administration as opposed to a Republican administration. All right, so let's keep going on. Yes, just to pile on the bad news there, it is a negative 16.85% APR, but we're hoping it's going to turn around. But you understand that when you're investing in stocks, the past performance is not going to be a guarantee of the future results. Okay, there's no dividend into stocks, so there's no need in talking about that. But when we look at earnings, remember we talked about earnings and stability and competitiveness. When we look at earnings, they've actually done okay on earnings. They've met their expectations consistently. But, you know, I've talked about this before, and I feel like that it's something that I need to bring up again when I talk about a Chinese stock. Chinese stocks don't play by the same rules as those that are based here in the United States, or for that fact, anywhere else in the world. In the United States, if you are a company, let's use, for example, Skyworks Solutions. Skyworks Solutions has to do filings with the Security and Exchange Commissions. They have to follow what's called GAAP, or the General Accepted Accounting Principles. So they have a particular set of rules that they have to follow. Well, Chinese stocks don't have to do that. They don't have to follow the same rules as they do here in the United States. And that's been a big contention in dealing with China in negotiations, is because, you know, we see the value of this company and we see the value of other companies, whether it's going to be Alibaba or Baidu or, you know, any of the other Chinese companies that are out there. But is the value actually the value? Is it the same as the valuation on a company like Skyworks Solutions? We don't know the answer to that. Now, one of the things that the current administration, that the Trump administration has been pushing for, is that companies like Trip.com be required to have the same accounting practices as any other company that's based in the United States if they're going to be traded on the United States exchanges. Now, this company just happens to be traded on the NASDAQ. The NASDAQ is the index that we follow here every day, but you know, there's other indexes too that are in the United States, but they all follow the same GAAP accounting principles. So the whole idea there is that what I'm looking at in earnings could be brought into question. And I might have taken the long way around to get you that way. But let's also look at how they compete. Now, let's bring in Trip.com and compare it to some domestic companies like Expedia and Bookings.com. They've actually competed pretty well when we look at it on a standpoint from Trip.com. Remember, although that they are around $13 billion right now, and some of the other companies may be larger, the point is going to be that the economy in China has had more of a comeback than any other place in the world. And that brings up another whole conversation about that China perhaps protected its economy over top of other economies out there. And, I'm one of those people that kind of agrees with that. But nevertheless, their stock is actually doing better than our domestic stocks. The reason is people are traveling more in China than they are here in the United States, or really, frankly, any other place throughout the world. If you travel to another country, for example, if you go to England, and you go there and you have a 14-day quarantine that you have to have. But if you come from England to the United States, they don't have that quarantine. So the idea is that there are more people that are traveling outside of the United States than they are inside the United States. So does Trip.com compete? Yes. It actually, right now, it competes better than Expedia and better than Bookings.com. Now, what kind of barrier is there in between Trip.com and its other competitors? Now, you have to remember, though, that the primary competitor is not really going to be Expedia. I showed you that because we're in the United States. You want to see how it competes. But there are other competitors out there. I didn't put Alibaba up there, but Alibaba is actually a competitor of Trip.com because, you can, it's just like, it's Google essentially. And in China, you can do different trips and arrangements and such through Alibaba. So that's competition. But Alibaba is much more diversified and it's much larger in that respect. So from the standpoint of what makes this company popular and what is a moat around it, it's this. It's the fact that it has a very strong reputation in China. In electronics, it's referred to as the network effect. The network effect is this. You do it because somebody else does it, and they do it because other people do it, and it just expands exponentially. So the network effect just goes on and on and on and on, and it grows from that standpoint. So the network effect is very strong because Trip.com is the largest travel company in China currently. They have about 200 million monthly users, and worldwide, though, they are popular in other parts of the world too. They have an opportunity for people to use their services in 50,000 cities in 200 different countries. So that's the reason why there is a narrow moat around this particular company. So let's take a look and see what Morningstar says about this company, because it's kind of interesting. It's different than networks. I keep saying networks. It's different than Skyworks Solutions because Skyworks Solutions was trading at a premium. It was higher priced over top of its actual fair market value. What Morningstar is saying about the fair market value of Trip.com is that it's $38 a share. The current value at $32.03 puts it at a discount of about 16%. So we could take that and see what you think of it from that standpoint. And we're looking at it from a star standpoint. We haven't had too many of these recently. This is a 4-star company as rated by Morningstar. So remember, though, the 4-star is not going to be based on quality. It's going to be based on fair market value and what it is in relation to that. Now, what does this company do in comparison? Let me make this just a little bit bigger for you so you can see it. When we look at Trip.com and we want to see what other analysts are saying about this particular company, 9 of them are saying that it's going to be a strong buy, and then 5 of them are saying that it's going to be a hold. But really, when you average all that out, it comes out to be this. So it's really a strong buy in all in all from that standpoint. And when you look at what the analysts are saying, they're saying that it's an undervalued stock. Remember, though, this is the type of stock, though, that could be more in favor if there is a market rotation from growth stocks to value stocks. So we've gotten through a whole lot of really good information today. Remember, this is not my recommendation to go buy, sell this particular stock. It's what the analysts are saying. If you need help with your retirement plan or with your investments, give me a call. Set up a time where we can have a conversation. Go over to my website at richardsfinancialplanning.com. Go to the schedule a call to learn more button, and you can schedule a call 20 minutes. There's no charge for the first time. And you and I can have a conversation with each other about your particular investment needs. So that brings us to the end. If you're listening to this on a replay, I want to remind you that go ahead and hit the subscribe button or the like button if you're doing it on Facebook, or the heart button if you're listening on Twitter, and subscribe so that you can get notified when I have other information that is good information that comes out, and so that you can be notified when I'm coming on tomorrow. So that brings us to the end of the day. I'd like to thank you for listening and hope that you have a really great evening. Listen to or watch the disclosure coming up, and I'll talk to you tomorrow.